All right, welcome to another recap. For this recap, we're doing the last 2 weeks as I missed week 17. So this is a kind of combo week 17, week 18 recap. As usual, we'll start with the activity and then close with the overall account balance. All right, so looking at the 28th, 2 Mondays ago. So as is every Monday, we have our two weekly buys of CGDV and DIVB. So 100 into each. Now I'll kind of pop these open just so you can see the purchase price on the date. So this was 34.82 for CGDV and 46.20 for DIVB. Okay. Then at the end of the month, we received our money market interest. So our cash is in SPAXX. So you can see about $62 on that. Oh, actually, to take a step back, had our old NVDA put expired on the 25th, so it kind of cleared out on the Monday. That was at 104. Strike it closed. Nvidia closed above 104, so I just let it expire. I could have rolled it, but I just figured kind of let the option selling breathe for a little bit. So then moving to the next week, same again. Bought the two weekly buys. So I'll pop in so you can see the price. 35.70 for CGDV. 47.04 for DIVB. So if you're tracking, the prices were higher than on the 28th because it was kind of a growth week. So higher price, less shares, lower price, more shares. So it's kind of again it's dollar cost averaging in. Also on the 5th, with NVIDIA, I think was down about 2% for the day at this point. So I sold May 16th, put 103 strike for $76. And I'll pop that in. So you see 75.32, the actual cash in account, because again, there's commissions, there's fees. So the big boys have to get their cut. So I'm left with 75.32. Then also on the 5th, I received what is what is for this account the largest dividend to date, both in terms of dividend per share and also total dividend at $73.91. So I'll pop that open. So what did that get us in terms of reinvestment? Because again, all of our dividend stocks and ETFs are reinvested. So that 73.91 dividend bought 1.4. I was rounding down. Bought 1.4 shares of JEPQ at a 51.46 price. Okay, so this is May. So this is our fifth. JEPQ pays a monthly dividend, so it's our fifth dividend of the year, and the biggest one. Okay? So as you'll see in a bit, the account, despite the five dividends I just mentioned, the ETF is down for the year. But as I've said many times before, this year we're kind of a flat to down year. Every month we're gaining shares and we're getting more and more shares with the kind of dividend snowball effect, right? So what does that mean? That means that in June, okay, this share we just bought in May, this share will also get its own, kind of also get its own dividend. So if it's say, say 50 cents a share, uh, you know, we'll not only have this extra share now, but in June, this share will generate an additional 50 cents. Just rounding down, this share will generate additional, 50 to 70 cents um, from it as well. And then that new share will generate dividends and so on and so on and so forth. So it's not just like a kind of a stable or static dividend throughout the year or throughout time. The dividend, even just doing nothing as we're doing this year, just doing nothing, the actual dividend amount is increasing um, month over month, and the amount of shares that will receive that dividend is increasing month over month. Okay. So kind of one of the cool things about this kind of latest this kind of cycle, these 2 weeks, is that you actually see all three types of income this account is generating. Okay? So you see, kind of working backward, you see the kind of the long term, what will be the biggest and most passive part of this account, which is the dividends, right? So again, dividend payouts, for reinvesting those, snowball effect. So you see a dividend payout. You also see the kind of the active portion, which is actively selling options here, and you also see down here the other passive method, which is simply the money market interest. So of course we know long term, the money market is not going to keep up with inflation, but we're using that money to buy shares, which will appreciate. So it's a nice kind of like cycle here. So it's kind of a mix, right? You know, in the long term, cash may be trash, but in the short term, as we're seeing, cash is king because it's generating income, right? So year to date, it's being the SPY, it's generating income, and it's also allowing us to dollar cost average into quality ETFs, and it's also allowing us to sell puts because we're not doing any margin or naked puts. We're not doing anything crazy like that can blow up the account. All of the puts are cash secured. Okay. So that is the kind of activity in a nutshell. And I just wanted to kind of quickly look at, I mentioned again the JEPQ kind of monster dividend. So we're going to just take a quick look at the history of the JEPQ dividend. Right. So if you look at the history, you see that again May 1st, the dividend we just received was just shy of 60 cents. You can see the cash amount here. So if you kind of look back, again, even April was relatively strong as well. Again, a lot of volatility in the market, which obviously helps option selling, helps premiums. So you can see 59 here. So to see the kind of the largest or anything larger than that, you have to go all the way back to scrolling down. You'd have to go all the way back to November 1st, 2022, to find the a higher dividend than the roughly 60 cents that we got in May. Okay. So again, definitely not bad. It'll be interesting to see again with the increase. Will volatility kind of like maintain? Should we expect the dividend to continue to increase? I would think from a year over year perspective, I would kind of expect it to increase year over year for the next few months. Will it increase month over month? That's again that's kind of tricky to say, but I think we're definitely in a more volatile environment. So again, I would expect year over year to remain, hopefully kind of over the 50-cent mark. But time will tell, and I will of course keep you updated as the dividends come in throughout the year. Turning to the overall account balance, so again, continue the kind of week to week volatility. So SCHD actually down more. I think probably a lot in part due to the recent JEPQ dividend we just talked about. SCHD is actually now doing year to date worse than JEPQ by about a full percentage point. FNILX kind of down is for the existing ETFs down the least, though still 4% is sizable. Apple, I think definitely kind of took a big hit the last couple of weeks, and then Microsoft, after some kind of really strong earnings, is actually up. So this was a stock that was down over 10% not too long ago, and it's now up 3%. The lone positive stock or ETF in the account year to date. So interesting. And then for the kind of the new to the account ETFs, you can see, I mean, kind of still jockeying back and forth for who's doing better. Right now it's CGDV. So about 1,800 has been put into each. So CGDV is down about $9. DIVB a little bit more, down about $30. Uh, but still kind of not kind of too far from their cost basis. And another big call out is that they are now both, again, no big surprise here, but they are now both well over Apple and Microsoft in terms of percent of accounts. Again, even from day zero, we knew this was going to happen as we're putting money into these two and these two only, and kind of keeping everything else, or not putting new money into anything else for the rest of the year. And then to kind of close out, we have our NVDA put. Again, this was sold for about the cash you received for the put was about $75. NVIDIA's been kind of like flattish. So with time taken away, that's down to $70. So basically means that we've had I guess an unrealized, or we have quote unquote made, because we already got the money, but we've kind of made $5 on this put. So if we were to close out this put right now, there would be a net profit, net gain of $5. Okay? So where does that leave us? Pretty much flat. So if you kind of actually take away the NVIDIA put, we're pretty much like down $7 year to date. Um, so with all the ups and downs, or essentially from a overall account balance, pretty much where we started on January 1st. Of course, the mix of the account is is much different, but the overall result is pretty much flat. Okay? So in terms of going forward, again, it's anyone's guess where the market will end up. But flat so far is not a bad place to be in, right? So we have, again, compared to January 1st, we have more shares in pretty much every existing stock or ETF. We also have now deployed, kind of deployed about you know $3,600 into two solid dividend ETFs, which will continue to pay um, for the rest of the year. So that wraps up week 17, 18. As usual, I hope everyone has a great week ahead. Stick to your plan. Don't leave the FUD alone. Leave the FOMO alone, and just kind of again think of a long-term mindset, and you'll be okay. You'll be okay. We'll be okay. The market will be okay. All right. Take care.